Dun, 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 we're gonna make a theme song for this podcast, y'all. Welcome in for the first ever Noisemaker podcast with the two
Yeah,
noisemakers. Yeah.
that's
So
us.
some of you probably are wondering why it's called the Noisemakers. I'm gonna tell part of the story. I'm curious to see if you're going to add anything to it. So we're on Twitter, and there is there are let's say specific people that think there are people out there that are just making noise around Tesla, and we're just here to make noise. Like we're just making noise, and we're like, okay, this is the perfect name if we ever wanted to start a
It is.
podcast to call it the Noisemakers, and lo and behold, we are the Noisemakers. Did I miss
There we
anything there,
are. No,
Alexandra?
that's perfect, and I actually think it's really us because, and I think it's actually leading very well into our first subject that we want to touch on, which is Twitter hell.
Yeah.
It's absolutely crazy how many times I get told, "Oh, you're only doing that for clicks." I mean, what the heck would clicks on Twitter or a huge follower base bring, right? I mean, I love
Hell.
all my followers. Exactly, that's exactly so.
Emotional pain.
Right, and so thinking that we're making noise to get even more pain and to get even
Yeah.
more people screaming at us, no. No,
It's
all fine.
interesting.
There
That's the biggest thing I found from and by the way, in the comments, thank you all so much for joining us. We already have 12 people watching. Amazingly.
Wow.
Insane. Thank you all so much. We really love you. I really think, and I love this comment too. Where are your vuvuzelas? You remember that from the World Cup, like the
Yeah, that's
noisemakers, the
funny.
vuvuzelas.
Good.
Yeah.
Adore them.
I've started to really learn a lot about what being a public figure is with this YouTube thing, and like this Twitter thing. I never really understood what it was like. Just like this is where I come from, and I know this is where you come from too. And I think a huge majority of people that put out information, this is where they come from, is that they feel like I feel like I can bring value to a discussion by bringing my experience forward and what I've learned to try and make it digestible for people. And if people like it, great. And if people don't like it, great. But it's not like I'm trying to maximize a view count. I'm trying to maximize value. So like, and if it overlaps with something that I'm passionate about and I really love doing, then I'm going to try my best to bring more and more value. And if it grows, then that means that it's probably valuable in some way, right? And the growth of it is actually very fascinating because, and this is something that I know you can probably talk about for hours. And it doesn't just bring positive attention; it brings a lot of negative attention too. And that's something I've never experienced before. And at that scale, I've had people tell me that they don't like me, at the workplace. Oh, you're such an idiot. Okay, great. But you've never had entire YouTube channels dedicated to it. You never had entire hundreds of Twitter accounts going after you. Very strange. Very, very strange. And it took some time to get used to. It really, really did. Yeah.
I agree with you, but I do also believe we're not only how do you say in English, Samaritans? We're not only doing it for the good cause. I mean,
sure.
Let's be honest. And I told you I really want in this broadcast not only just have nice talk. I think we all have a little bit of I use a nasty word, attention whore syndrome, right? We all, I mean, I like to shine and I like to have, oh no, here I go. I mean, we won't be monetized, right? There we go.
And we need 1,000 subscribers first.
Exactly. So at the moment we can still say all the crap we want. We want to shine. We want to bring something to it. I can tell it from me personally. A year ago, I had 20, not 20,000, 20 Twitter friends, which were my real life friends that were also on Twitter and were there for a long, long time. And now I'm at 47,000 or something like that. I think you're close to 60,000, which is crazy, right? The growth of this community is absolutely insane. But initially it was really because I was so pissed off about these rating agencies. I did my little Tesla calculations in my corner and I said, this is it. I think I'm the only one who can speak about that. So let's go out with it. So Twitter is really wonderful because it amplifies a message. It brings it out to the broad masses. You sometimes have interaction with Elon, which obviously brings it even more attention. So that is the good side about it. And I think we all strive for that. I'm sure everybody, including you, we're happy when we get a like from Elon or when we get a comment from Elon. Sure. And it really marks us, right? So this is the fun side of it, but it's also the little bit the attention whore side of it. But But what really comes with it as a surprise is more you grow, more you really get nasty comments. And it's not, I mean, I'm very open to criticism. I can do wrong calculations or can have a wrong opinion or get too political or whatever. I hear all that. But when it goes, you're a bully, or I mean, I had people sending me death threats, and I know Kirsten just went through that again. And I mean, really horrible stuff. Or, oh, I know where you live in Santa Barbara. And I'm like, ugh, now what, right? So there's really something, and I think it's actually getting worse. I have the feeling the last couple of weeks have grown, and you don't know how to act to it. The other thing that happened to me was after Austin, right? I mean, I'm a chubby lady. I'm trying to lose weight, but I'm a chubby weight. I had people fat shaming me after that event. I mean, who in the world would do a thing like that? This is my life. This is my body. This is my journey. I don't need anybody saying anything about it. I'm over it now, right? And it gave me a good ass kick. Now I'm losing even more weight. But it's nobody's business. That's what I'm trying to say. And I think Twitter has something, and I think Elon actually tweeted about it yesterday. There is some meaniness around it. There's something really nasty about it. And I don't think the reporting system and the blocking system is really up to it yet. Yeah, there it is. Twitter can unfortunately send one down a negative rat hole at times. Good to take breaks. And so that is that is true. There are moments where you just feel like I need to get off this thing.
Yeah. I think for me, so I haven't, and I'm sorry you've gone through that and you're going through that, because that's like who would ever, like, what is the rational explanation for somebody doing that? Like I can't find it, right? It's very difficult. So for like the way I view it is what I've received, like let's call this the hate or whatever it is. It hasn't been nearly as bad as that. I do wonder how much of it too is like sex related, is like because I'm a man versus being a woman. I wonder if women have it tougher in that sort of, because I feel like women are judged on their looks a lot more than men are, in my opinion. I could be wrong. But the way I've been sort of viewing it is, at first it was difficult mentally because nobody likes to be hated. It's not a fun feeling to feel like when you're doing something that you feel like you're vulnerable in a space where you're sharing a thought, you're sharing an idea, you're sharing information that anybody could pick apart, right? You're being vulnerable, and you get used to that over time. But then if somebody outright attacks your character, your personality, without even knowing who you are, is just very, very strange. And I think it's more reflective, and we talked about this briefly before we came on, and 100% agree with you. I think it's very reflective of the individual hating versus the individual being hated on, because you have to think about it as like, okay, where do you have to be mentally to sit in front of a keyboard and then say those things to that person? I don't think a person that has a life that they're happy with, that they're proud of, that they're surrounded by love with, like in what sort of universe would they sit in front of a keyboard and say, you are a piece of shit, I fucking hate you? Exactly. That's weird. You know what I'm saying? Like what happened? Yeah. Are you okay? You know? And I've sometimes like, and I've sometimes I legitimately would go, like when I get those replies on Twitter, I would reply, are you okay? Because I'm legitimately asking, like, dude, are you okay? Like, is everything okay? And so it really brought my mindset towards that. It's like, okay, so whenever that happens, I think I hope that it's 95% of people that are just in a very unfortunate situation where they're trying to channel that negativity towards something that they hope feels their pain. And 99% of the time they would regret it. They would absolutely regret it, because they're like, fuck, I wish I wouldn't have said that.
And they would never do it person to person. And the one thing that helps me in those situations, and I actually have a card here in front of me on my desk that says, hurt people. Yeah. So that really grounds me when I hear, because it's so often. I mean, I wouldn't say it's daily. I don't want to over dramatize it, but it's at least 2 times a week, sometimes 3 times a week, and it's really nasty. And so I have different reflexes. First is if somebody that follows me and that usually was nice but now seems out of it. And I mean, there's mental illness out there. There are drugs out there. I have the feeling that sometimes people are under the influence when they do this crap, and then the next day it's better. So initially I just mute them, and then I follow up a couple of weeks later and see whether they calm down, and then I unmute them. But I've come to the point that I block people, which I really don't like doing. but I mean, it's I have to protect myself too, right? It's one thing that these people want to hurt me, but it's another one that I allow to be hurt, right? That's the step where I have to. I'm responsible for myself, so I'm blocking probably more people. When Elon came out a couple of weeks ago saying, "Oh, I unblocked everybody. We should all unblock each other," I said, "No, there's no way. There have been people that have really hurt me. I'm not unblocking them." And the other thing, I'm not unblocking all these crypto. Crazies, right? I mean, I'm not unblocking these people, and they're all back, right?
Yeah. I actually unblocked everybody. I unblocked everybody like a couple months ago. It was like way before Elon said, because in my head I'm like, okay, like if I go, and again, I think you and I specifically are getting different kinds of hate, and I think for me it's softer hate, and it might be easier for me to process because it's almost like I've rationalized opening up my blocking, because even if they're that one person that I may have emotionally blocked because it hurt my feelings, there could be a small percentage chance that that person actually had very legitimate feedback, and I was just not in the right state of mind to absorb it. And so like for me, it's like, okay, I don't want to miss out on that. Like I think for me, I'm a big believer in really doing that, and that's a risk too, because if I read the wrong comment, you know how it just puts you down a path of
exactly.
It just you're just fucked for like a day and a half, because you're this thing, you can't get it out of your head. At least that's the way my brain works, right? So it becomes very, very difficult to manage. But it also, like, what's interesting about that too is, you know, with my YouTube platform, like my YouTube platform is monetized. My Twitter, there's no way for me to monetize it, but my YouTube platform is monetized. What I find the most interesting is the ones that hate me the most, or I hate the content that I do the most, give me the best engagement. So they'll watch beginning to end. They'll watch all the ads, right? And then they'll go make content on it, and then they'll direct more people to me. And I'm like, bro, you're literally helping me take my wife out for dinner at extra time a week. Thank you. No, and it's honestly, and it's almost like flattering to me, because it's like, for me, it's like, okay, so like I've impacted somebody's life in a way that I didn't even expect. And it's like, they're really going out of their way to make that happen. And the fact that it's monetized, I'm somehow being rewarded for that. I'm like, okay, cool, great. And that helped me like almost like come to peace with it, because you're never going to make everybody happy. The bigger you get, the larger the percentages that somebody's just going to outright hate you. You know, like they're just going to hate you for whatever reason. It's because maybe how I look, what my race is, you know, like whatever, because I'm stupid, I'm spewing garbage in their mind, whatever it is. It could be whatever it is. And so
I think towards women, it's really more personal. I usually hate this gender difference, because I'm no partisan at all of, you know, positive discrimination of whoever. I think everybody should be seen by merit and by what they bring to the community. But I do believe women are really targeted in a different way, and we're more fragile, right? Because we're just not used. We're not the same warrior types than you are. It's just genetic. Let's face it. So it's actually funny, because I get aggressed for being a bully. Right, I've got a couple that like, oh, you're such a bully, everybody thinks you're a bully, and I'm like, and that's the one I really like. Everybody thinks you're a bully. I am sorry, there are 47,000 people who like to hear what I'm saying, right? But there we are. And then I have the other ones that are, oh, you're such a girl, you can't take any criticism. I'm like, what is it? Which one?
So you know what that means? That means you are doing it right, because if both extremes are not happy with you, that means you're going right down the middle, because you're triggering both sides, right? Like I've gotten both. I've gotten, you are a Tesla hater, and you are a Tesla like insane hyperbole. You know, and I'm like, perfect. Exactly. I am trying to be unbiased, and I know I'm biased. I have a natural bias, but at least I'm trying. And so that's another signal I take on. It's just so fascinating. The psychology of this journey is insane, and I feel like there is a lot of power to it and a lot of value, because I really do feel like I'm understanding the human species better. And it's also helping me strengthen my psyche and my mental to be able to face these moments in a different context, right? So it's, and one of my things in my career has always been, what are the things I can learn from the things I've done and apply to other things that I do as I sort of move through life? And this YouTube thing, the accidental nature of it and how much value I'm getting out of it is completely mind-boggling. Probably more valuable than Tesla, to be completely honest.
Wow, good.
Yeah, it's mind-blowing.
And I mean, you started earlier than you had me, but you had me. One of my first interviews was with you. I think the very first was with Baron, and then was with you. And I mean, you've just exploded since, right? It's
so weird.
It's been in 12 months. It's been such a journey.
But you have too. I mean, you've become a very, but it is what it is. It's like we're trying our best to serve a community, in the best way that we can, and it just happens to be really fun. So
It
if it's
is.
fun, I'm gonna keep doing it.
It is. It's actually funny as well because it's taking over my days, right? I mean, I have a day job. I know you've dedicated your life to this, but I have a day job, and my agenda, everything that's Tesla related, is purple. And you should see my agenda. My assistant all the time says,
purple.
it's purple. And I'm like, yeah, it's all purple. There we go. This interview, that thing. I just spoke to Al Root from Dow Jones because I just got the Moody's credit opinion, which is absolutely ridiculous. So I want him to write the first article on it because I want this time I want to be more strategic, first get it into the press and then get it on Twitter and then scream. So it's funny. I mean, who am I that on Friday at noon, right? I talk to one of the best journalists on the subject.
I love it.
And he listens to it. Me too. I'm like, wow, I love it. I'm
freaking awesome.
For a couple of minutes.
It really is. I think it's like, it really speaks to this transition to the individual gaining more power. I really think there's a legitimate transition to the individual gaining more power in the realm of media. Whereas before, and we've had this transition for a long time, but I think since COVID, it's kind of exploded because I think the inherent mistrust that I think a lot of people have had with a lot of things that have been going on has really empowered people to come out and speak. True. Like for me, it was the Tesla story was completely mishandled, horrifically bad since 2017. And I know that's why Rob Maurer showed up. I know that's why Dave Lee showed up. Like these are people that are like, yo, what is going on? Like you guys are not covering it right. And as more and more things are miscovered, more and more people people realize they're being miscovered. I think more and more people will come out to the forefront and talk. It's just and it's a good thing.
It is a good thing, and classical media is coming to us now. I think this is absolutely crazy and encouraging. And the other thing is, I don't know you, but I never watch TV anymore. I mean, my husband still watches CNBC, but I still don't watch. I mean, nothing. Like he calls me when Gary's on or whatever, and I watch for 2 minutes. But that's it. I never watch any TV anymore. I'm on YouTube. I'm not reading newspapers. I'm reading Substacks. There are so many good people on Substack. I mean, financial people, where I learn a lot in 15 minutes of reading it, much more than by reading a daily journal or anything, usual press. It's just, there's nothing in it.
Yeah, it's more valuable. My YouTube is my new TV. And the only thing I watch TV for is sports. That's it, live sports. That's it, Football. Right now I'm watching college basketball because Penn State happens to be good this year, which is a rare occurrence.
I think I didn't see it yet, but I think UCSB won. I can't believe it. They're so bad, and I think they won today's game. So I'm absolutely so maybe I'll be rooting for UCSB. We'll see.
Yeah. No, it's been fascinating. It's been such a transformation, and it's funny that now that Elon with Twitter, he's kind of at the forefront of it too. Like he's brought that forward, and watching that evolve, it has been such a fascinating thing. I know there's things on your docket you want to hit. So which one do you want to hit?
I mean, I watched last night the All In podcast, and probably lots of people here did because it's one of the best podcasts out there. Another example of how citizen journalism has just taken over. There's no better discussion anywhere else at the moment than they are. And they were discussing the American banking system, and Jason was bringing forward that he would like banks to charge for checks and for running their bank account, whatever. But in counterpart, the bank wouldn't be allowed to use the money that you deposit there on your checking or savings account to lend it and to make other business out of it. I mean, this is obviously a pipe dream because that's how banks function, right? They live off the deposited money and that's their business model. But they went down the rabbit hole of, how could a bank make money other than taking the risks of duration differences or valuation differences or whatever. And I wanted to explain what happened in Europe already 50 years ago, which didn't happen in the US. So in the middle of the 70s, the French president was Pompidou. He was very good friends with the Rothschilds, which had all the banks in Europe, the richest people of Europe at that moment. And the Rothschilds and Pompidou came up to the idea that whenever the French state gave out a new treasury bill or treasury bond, instead of doing what they do in the United States, that you as a private person can buy it directly from the treasury, you would have to go through a bank, which obviously the Rothschilds loved because that meant they would make a margin between bid and ask on those treasury bills. And so the French state adopted that first. And then in the 90s, they made it European law. So in Europe, whenever any of the states or the European Union want to issue new debt, which obviously is horrendous because you know how indebted Europe is, how much debt they have. I mean, one thing they'll never run out of is making new debt in Europe. It has to go to the Société Générales of this world or the Deutsche Banks of this world or whatever. That's why the Swiss banks are different, right? The Swiss banks is a different situation, and that's why Credit Suisse was the weakest one in the group. But the European banks have this.
Sorry, can I clarify one thing?
Sure.
So the Swiss bank in Switzerland is not part of the European Union, correct? They're independent.
Exactly,
yeah, okay.
They are.
Just wanted to make sure that was clear.
And the UK isn't either. So these other European countries have all adopted this, which makes the banks incredibly rich. That is their main income, right? Because anytime the state has to issue something, a treasury bill, it has to go to the bank, and then the bank makes money on selling them. Okay, so this is the main income. That's why in Europe, checking accounts cost nothing, checks cost nothing, credit cards cost nothing. I mean, there's still the 3% merchant fees, but all the banking services are free. When the Europeans come to America, they're like, wow, everything costs money. And the T-bills, you can buy them directly from the state by going on the T-bill or T-bond website, on the Treasury's website. But that's the fundamental difference between how in America the banks have to find ways of making money and therefore take bigger risks and have to really go in all different niches. Then they lost the credit card market to PayPal and then Stripe and all the others. Then they lost the mortgage market after the 2008 crisis. So the banks are in a little bit of an uncomfortable situation because they don't have the big money from the T-bills and T-bonds. And a couple of the other big money makers were breaking away thanks to the internet. So American banks had to become structurally more risk-taking to make money, or they have to become more expensive for their clients who want to deposit money. So I wanted to explain that.
So it's very capitalistic in nature. The way the banks operate in America is like you have to offer value for you to actually exist in a way, right? They still have regulation. You still have this thing where it's too big to fail.
And what's in Europe really is actually it's taxed, right? It's the taxpayer paying the banks through this allocation of T-bills, right? Because the state gives them to the banks. So the state is what? It's the taxpayer. So we're actually socializing banking because the banks now suddenly have this guaranteed income of always refinancing the debt. So that's when you talk about European banks, they're much more a socialized system than they are here, which are much more capitalistic system.
So what's the downside of the European system?
Well, it costs a heck of a money to the taxpayer. There's just you make more debt on more debt because to pay the banks, actually, you make even more debt, right? That's why Europe is so indebted. And the ridiculous part of Europe is they don't have a defense budget, or not a defense budget that you can call a defense budget, because they all know that Uncle Sam is going to come if anything happens, right? So instead of having to get out of their whole annual budgets also a defense, well, they become more socialized. So it's insurance, it's health insurance, it's workplace insurance, and it's the banking system. So the banks are heavily subsidized on a continuous basis through this system. There is no doubt. It's been going on for 50 years now.
Got it. And so does that also kind of disincentivize the European banks from doing riskier things because they know they already know they can't fail and they're just going to get the check. So like, why try to do better and cooler things?
I mean, one example is 20 years ago when I was working there, Commerzbank was already a really, really badly run bank. They're still there. They're still around 20 years later. For a long time, everybody was going, yeah, they're going to merge with Deutsche Bank. They're going to merge with Deutsche Bank. Nothing happened. They're still around. So the whole thing is it's sclerosed, because there isn't a constant income flow, right? If you have constant revenue that's guaranteed, well, you can actually live large, right? And it's also incredible how many employees there are in European banks. It's just, you have no idea how many, in any little French town, German town, Italian town, you find all the banks. They have the best locations. They have big offices. They're all sitting there. They're all behind their computers.
But what are they doing though?
That's a good question.
Okay. Okay. Got
That's
it.
a very
Okay.
good question. But they're all and they have the strongest unions. The ones that are open on Saturdays are not open on Mondays. I mean, you have no idea. European banking is a whole miracle.
Interesting. Okay, I had no idea that's how it worked. So that's very helpful to understand. Okay.
Yeah.
And then so let me ask you this. So like within the context of what just happened with Credit Suisse, what just happened with Silicon Valley, one of the things I've been hearing is like, well, this is just the tip of the iceberg. This is just getting started. Do you have any thoughts or ideas around that? Like where's your head at with that?
I'm 56. I'm always saying it because I want people to
you
tell
were
me
36. What
there
the
you go.
heck?
Exactly. That's why I say it. You are 36. I know you are. So I'm 56. I've seen some banking crises. And I've also seen a lot of cycles in economies. And I've always been passionate about it because I always had, small business owner things because that was what I was also doing, but I always was in finance as well. So I had both sides of it. And I love trying to analyze the economy. I have never seen such a mixed bag than we have now. You have on one side the consumer still spending. You have credit cards that are exploding. You have no idea. I mean, these credit card debts, they're just going up and up and up and up. It's crazy. They're still buying cars. I think it's slowing down now in Q1, but I mean, they were still buying cars like crazy until December. At the same time, the interest rates are high for that now. Everybody seems to do either leasings or financing. That rate went up a lot. I just don't see it. On the other side, you don't see foreclosures in the real estate market. I'm looking very closely at both in California and in Las Vegas. There are no foreclosures. That's the one thing I'm waiting for, but there are no foreclosures. So it's not in the real estate market. The real estate market is completely stuck. Nobody wants to take a mortgage at 7%. No seller wants to sell because he has a wonderful mortgage at 3%. He doesn't want to give it up. The prices have to come down. Nobody wants to give in. So the real estate market is completely sclerosed there. Everybody's waiting for something to happen. So I've never seen such a mixed bag. I'm sitting there, I'm going, okay, the Fed has to lower the rates. But there are a lot of arguments for them to not lower the rates. I mean, not that I like those arguments, but they are real. The housing market is still not where it should be. I do believe the Fed is looking very closely at the housing market, and they're just like, okay, we have to go higher. We have to go higher because those prices have to come down first. It doesn't happen. So it is a very, very strange situation. Again, like I said, 56 years, I haven't seen anything comparable. And it doesn't smell for me at all like the 2008 crisis, except for auto financing. Car financing, I think, is a real bubble that was blowing up for not only the last 3 years, for a long time. These 0% financing deals. And at the same time, they're financing over 5, 6, 7 years. And it gets longer and longer. The value of those cars is zero. I mean, exactly a 3-4 year old car now, what is it worth? Nothing. If they have to repossess, they have an issue. They have a gap on their balance sheet that they have to fill. And at the same time, I want to just make sure that we all understand in what of a hell legacy auto is. Their factories, their fixed assets, they are not worth anymore what they have in their balance sheets either, because those factories are not what they need to have to be able to compete with Tesla. So these factories have a book value. Same problem then with SVB. They have a book value just because they depreciate linearly. That's not mark to market. And those factories are not worth what they have in the books. So their car loans are not worth what they have in the books, and their factories are not worth what they have in the books.
Has anybody estimated how many billions of dollars that is?
No, I haven't, but it scares me to heck. And then not even talk about the franchise dealers who are going to make them all the legal cases that you can imagine. They're going to be in for so much trouble getting rid of those franchises. You have no idea.
Can I pull up, can we do an exercise? Can I pull up GM's balance sheet and can we look at, GM investor relations. And then while I do that, there is a graph that I saw. Maybe I would like to get your take on it while I pull up GM's thing.
Take your time.
So this is a chart that was, did you see this thing?
I saw you yesterday with those. They were really good, those two guys.
They were phenomenal.
I didn't watch all of it, but they knew that.
I really enjoy them. Yeah.
Yeah.
So this is from February 2012. I believe this is either monthly or quarterly, whatever it is. It's all the way up to this February 2023. Just for the people that are not watching, maybe have not seen this. So the blue line
that's
is
what I say. This is not a bubble. I mean, obviously it got worse during COVID if you look what happened in 2021, but this is a bubble that has been growing over time. You know, it wasn't as if it was gone after the crisis of 2008. No, it was steadily there, right? It's crazy.
And so what the y-axis is what percentage of loans that are that are delinquent 60 days delinquent per FICO score, and the blue line is less than 550 FICO. So 11% of auto loans for people that have a FICO 50 are 60 days delinquent or more. That's insane, right? I mean, that doesn't seem right. That's like yeah, okay. All right,
it does. I mean, but it looks correct. But the problem with it is that this is very worrying, because contrary to Tesla, if they want to repossess a car, they know where the car is, right? They can even summon it back if they want it, or they can at least make it inaccessible to the current owner who is late. These people have to now run after these people. The GMs and the Fords have to run after the people who need to be repossessed, and then they have a car that is not worth what they have it in the books for, right? They don't want this car. Farzad, I promise you, the last thing they want is that car. They just want somebody to pay it again. But that's where we are.
I believe you.
Now, be careful with GM's balance sheet, because they have the financing, the refinancing on a different part than on the normal income statement and balance sheet. They do that through their financing.
So this is combined.
You can do that. You open this one,
Is this
but
one
make
right?
it a bit bigger. Yeah.
Let's
so look at non-current assets. So that will be equipment on operating leases. Now we want. No, that's not what we want. This is all the cash equivalents. Exactly. Well, this is it, but that's 37 million, which are probably worth nothing. And then property. See property. So you see property. It's the third line in the non-current assets. I'm sorry, I have to look close. Yes, exactly. So property, 45 million that have now been depreciated by 10%. So what does that tell me? That tells me, so in 2021, no, actually it went up. It went up from 2021, 40 million to now 45 million. So they must have had new plans, but that also means they haven't depreciated the old ones by much, right? I mean, I would have to look into the little text how that, but those 45 billion, sorry, not 45 million. Yeah, this is, billion. I mean, I would love to know how much this is worth in 2-3 years, because this is obviously not the gigafactories of Tesla. This is the Detroit and wherever else they have in Mexico and in China, plants that are just not to the same standard. If you think that Tesla considers the Giga Shanghai already being outdated and needing refreshment, this drives me crazy.
Yeah. Isn't so this right here, the $40 billion of GM Financial receivables net on the GM Financial, these are the loans that are coming in,
exactly.
right?
40 billion. 40 billion.
Yeah.
Can you imagine?
Crazy.
Yeah.
And that's not marked to market, right? This is this is valued at the time of when
exactly.
Yeah. Wow. So this in reality could be depending on the how much it depreciated since the peak and how many cars are out there and what the EV transition's doing.
This could be in their face. If this goes quickly, if the EV transition happens in 3 years, they have 40 billion in their face.
Wow. Just like that.
There will be people who will keep their car, right? That's what. But I mean, anything that has to be repossessed is going to be their loss.
So let me ask you this: who decides what the correct value for this is? For this
Nobody,
40 billion?
because this is just linear in the books. Nobody values this.
Okay. So they could essentially, so they have no incentive to write this off essentially. So if they actually did value it correctly,
same problem with SVB. SVB had no incentive. They said, okay, we hold these securities until maturity. So at the end they will be worth 100. So we just linearly bring them to 100, right? If they were 95 over 5 years, you could go 95, 96, 7, 8, 9, 100. That's it, right? No matter what the market does. And that's exactly the same thing here. If they think they get all the money back, it's all good. That's what's there. But if half of this money or 10% of this money is not coming back, that part is valued. Let's say it's 10%. That part is valued currently at 4 billion. Only these cars may be worth 1 billion.
So they have to write off 3 billion essentially.
Yeah, exactly.
In that case, and this would impact this guy right here somewhere, right?
Exactly, like, everything. It would bring everything down.
Okay. Wow. So then,
and the same is on property, and the same is probably on equipment, right? The thing is, you can really take it line by line. I mean, goodwill is obviously the filler anyway, but the equipment and property and financial receivables, same problem, and those are the 3 big ones.
Wow. Okay. No, thank you for running me through that because that's easy to understand. Yeah. Okay. Yeah. And so this applies to every legacy automaker that offers financing. They're in this sort of, I guess, bubble. They're really in a bubble.
There is a bubble. Yeah.
Yeah. Well, you were saying something about rating agencies potentially, like there's a relationship between rating agencies and these legacy automakers.
So especially for GM, less for Ford. Ford is already rated junk, speculative grade. So Ford is already struggling, and you can actually see it. I mean, remember how Father was discussing beginning of January what a mess he's in? That is also because he doesn't have that little oxygen that the rating agencies give Maribara. I mean, I have no idea what GM must pay in rating fees to these rating agencies. I mean, I wish I would know, because this is crazy. They get wonderful ESG ratings, and they are still rated investment grade. And why is that important? Because that helps GM to refinance. So you saw those 40 billion. Those 40 billion are actually packaged and are refinanced by the market, right? And that can happen at a relatively normal rate. I mean, the credit default swaps are already higher, but it's still, those credit ratings help them to refinance at a relatively high, good margin. Less high than Ford would have to do it. And so they can still be quite aggressive in the market and tell new buyers, look, our financing rates are competitive, and do it through us. They actually, you do know that they're actually making more margin on the financing than on their cars. You do know that, right?
Yeah.
And that is because they still have an investment grade rating. And exactly. It's service and financing. That's how, and service and financing. So the issue is that they are at the lowest possible investment grade rating. They can't lose anything. If not, they're going down to junk. And they are maintaining it. I don't know how much wining and dining is going on, but they're maintaining it again and again. And if you compare GM's financials with Moody's, with Tesla's, it's hilarious how wrong it is. It's just absolutely, and actually in the rating reports, because I got those rating reports now, they say it. They say that GM's thing is bad, but yet they give them a good rating. And they say that Tesla's financials are stellar, yet they give them a bad rating.
How is that? Like, what's the rationale behind that? It's so
There's no rationale. There's no rationale behind it. They hate Tesla. They hate Elon. The Tesla and Elon are not going to pay for ratings. They're not playing this game. And we just have to increase the pressure so that they're so publicly shamed that in the end that it happens. That's just.
I mean, this is going to blow up in their face, though, right? This has to blow up in their face.
It will. Yeah. It will. It's just a matter of time, and it's one of Elon's strategies. It's just he says it all the time. If it's so wrong, in the end, it will be corrected. It's just a matter how long it takes.
When do you think that there's a potential that this comes to fruition, where the auto loan, this sort of thing where GM and Ford have really overestimated, let's say, how much they have on their books, and it has to be adjusted down in some way to actually reflect the real value of what they own?
The answer is Powell. The whole thing is, if we relaxed rates now, if rates come at least stabilize or even better come down, the whole thing can deflate, right? This whole tension that I just described could deflate, because then the lower credit scores, have some air again, and everybody just breathes again. If they continue rising, we're in a recession, and not a recession like they described last year. I love your dogs.
They're upset about the recession.
There you go. I say the trigger word. Not in a little recession, technical how they described it last year, but then we're really, getting into one, because the interest rate makes a heck of a lot of a difference when you're financing. It actually makes a heck of a lot of difference to a lot of people, even if they're not just working on a mortgage or on a car financing. People don't realize how important financing is in everyday's life, because suppliers have 30 to 90 days to be paid. They need to finance in the middle. So you have a lot of people that depend on variable rates and on financing that are directly linked to the Fed rates, and it has a direct impact on our economy. So I see the car bubble being the one that will burst the most and the quickest if they continue raising rates, and I just hope they stop.
So let me walk through this scenario, right? So if this happens, this means that automakers have a financing arm will have to be forced to write off a lot of this impact.
Yes.
You also have people that are going to be delinquent and are going to have to give up their cars, so that's going to massively hurt the economy, which probably means less jobs are going to be had for the dealership network and the entire auto industry, which is millions of people deep.
Which is already started.
It's like a not a flywheel, but it's almost like a spiral, right? Like that whole spiral of a recession.
It is.
And it has, and then you pair that with the fact that automakers don't really make affordable cars anymore, right? So now you're going to have automakers that are going to make less cars that are
not
unaffordable.
Making margin on it, exactly, and not making margin on the new models they're bringing out. I mean, it comes from all sides from them. They're closing in by the walls. But be assured, the one paying, I look at him, it's Farzad with his taxes. The United States government is going to bail them out. So it's not, I don't think they will go under. And that's actually probably the tiny little hair that keeps GM having the investment grade rating. That Moody's and S&P just say, what the heck,
they'll get bailed out.
Investment grade, they will get bailed out. That's it, exactly.
Man. It's just this why does it have to be this way? It's just so frustrating, you know? It's very, maybe like both of us will look at each other again in a couple of years and we're like, wow, we're so stupid for calling this for what it is. It didn't end up to be like being this way at all, but it feels like this is where it's going, and that we have all the signs that very clearly point towards this direction. And especially with my conversation with Ray and Zach yesterday, like these are auto industry veterans who essentially confirmed what we're saying, but in their own language. What they're saying is like, automakers are not making any affordable cars, and they're going to keep slowing down their sales. And we have this auto loan bubble with people paying insane amounts for cars that are crap, essentially, and there's no affordable real cars, and there's automakers that are just going to continue getting more profit and lower volume. And then at the same exact time, you have people that can afford less and less money as the Fed raise. I don't know. I don't know. It just seems like it's really trending towards a specific type of direction.
But you see, that's also why the GMs of this world are so occupied with keeping Washington happy, right? I mean, they are doing a lot of lobbying there. The unions are very active there. Yeah, exactly. So they have that last guarantee. I mean, we're looking at Mari Barra's PowerPoint presentations and thinking, 35 models in 2025, you got to be kidding, right? None of this will work, and it will not be that way, and it will not
be
that
5.
And in what volumes, right? This is just, and probably all at loss. But at the same time, they are doing the lobbying part, they are doing the shoe polishing part and all that, and that is it.
Is this? Go ahead. Sorry, I didn't mean to interrupt.
And I don't think I don't think we can do anything to change it. It's just the auto industry, like the bank industry, right? I mean, I still don't think what happened the last 2 weeks was a bailout. It was making the depositors whole, not the shareholders or the bondholders. So for me, a bailout is when the company survives. But GM will be a bailout. It will be GM that survives. It will be Ford that survives. They may ask them to merge. I mean, can you imagine if those two merge? But I also see that happening in Europe. I think Daimler and BMW at the end will merge. In France, not nearly all of them have already merged. So the whole legacy auto market will become either very niche player. You know, you will have the Porsches of this world, the Ferraris of this world, and the others will have to just all work together to have one platform, to have one process, so that it gets in the end solved. And that will be the governments behind them, pushing them to do it against the bailout. But I don't see how we can get around the bailout. We've been living too long interest rate free on those conditions, and it's also the consumer. The consumer was spoiled for too long. I'm not blaming the consumer, but the whole situation. I mean, can you imagine this stupid Fed? I'm sorry, I'm going in a rant again.
No,
but
please.
They were telling us more than
This
a
is good
year
content.
ago. It was transitory. Remember, transitory was the word in 2021, and the stock exchange just exploded, and everybody had money coming. I don't know how many checks we had during COVID. I mean, my kids got checks, we got checks. I never asked for any check. I just, every couple of months, there was another check. Exactly. That's when my kids started trading Tesla. It was crazy, right? And so this was the moment where, the party had to end. It ended. They ended it too late, too abrupt, raised interest rate too much. And if they continue, now they burst the first banks. They're going to burst the auto bubble, because that one is lingering for too long, because it comes from both sides. It comes from the side that these automakers are just not doing their job, but it also comes from the side that Tesla is being so compelling and so competitive that they're losing, right? So they have two major problems.
Man, is this a scenario where you've seen it repeat? Like, does this kind of thing repeat in history where they're like the boom and bust cycle? That's the thing I always hear: is boom and bust, boom and bust. Is this just normal?
It does.
Is this how it is?
It was in the good old times when it was less internet and all that. It was a 7-year cycle, right? I remember the one of coal, when coal was closed down, closed down, haha, they just delocalized it into Russia, but that was another story. So you had cycles like that, which and it was really a 7-year pattern, but it's quicker now. And I mean, I don't want to blame Twitter. I love Twitter, and even though we started with Twitter hell, I'm there every day and I'm really enjoying it. But it is true that good information, I mean, us now talking, later on going on,
we're the worst
Twitter
kind of information.
Exactly. Noisemakers. But the fact that the information gets explained. It's not CNN and Fox and MSNBC and CNBC having the news. It's us discussing it and getting to the bottom of it. I may have my little knowledge. The guys yesterday had their knowledge. You have a lot of other guests on that. Really, everybody brings a little bit to the puzzle, and our view gets much clearer and much more global and much more understandable. So I don't believe the cycles are 7 years anymore. I think actually Twitter and the way that citizen journalism happens now accelerates these phases, because people will react much quicker to new information, will not just wait for the regulators and the normal journalists to spin the story.
Yeah. Let me tell you what I've been really just very concerned with, and you tell me if I'm sort of barking up the wrong tree. So forget the bank failures, forget the Fed. I mean, kind of the Fed in this case, but this is the trends that I see. I see record high household debt. So record high mortgages, record high credit cards, record high auto loans, record high student loans, record high car payments, record high credit card taking on debt, like the rate, a record low savings rate. I see a defaulting car market in the subprime, and we are at full employment, right? And so the data set that I see is like, right. So this is what's going through my mind. The picture that paints to me, and you tell me if I'm wrong on this, is that we have an economy where people are struggling while everybody has work, while everybody's working. Everybody, like not most people, let's say the economy is stretched thin on average while everybody has a job. The second that job thing starts going down and less people have jobs, doesn't that mean that we have 100% chance of this whole thing collapsing? Because the people that have all this debt, where are they going to get the money? They already have jobs.
I understand. Right? And just one thing before I answer your question, can you please bring up the comment from Podar? It's a very good point. So these these legacy companies also have to pay the tax credit to Tesla, right? I mean, not that they're already in bad enough shape, but they also have to to pay the tax credit to Tesla, which, I mean, can you imagine every time they have to make that check, how happy they are? But I'll answer your question. You know, when I said earlier, it's a mixed bag, it really is a mixed bag. Real estate, no foreclosures yet. Job market, full employment. People having even 2 jobs, right? Lots of people there. I think the rate of 2 jobs just, again, at the level of 2018, which is crazy. So people are working. Employers are still hiring. It's not, that side is not blocked yet. The other
but my point is, like, once that falls, it's over.
Yes, that's the last straw. Exactly. I give that to you. And that last straw depends on the Fed. It really does. If they come in aggressive next week, where the 50 base, I don't think 50 basis points even on the table, but even 25 is too much. They have to reassess. They have to calm this down and you know, hold it there for a couple months to see what comes in as data. I actually found the PPI very encouraging. So that producer prices are already coming down. I think import prices are now below 0. So we're actually importing deflation. So lots of things are actually ready to bring this inflation level, maybe not to 2%, but to 3%, which will be fine enough. You don't need interest rates at 5% if you have inflation at 3. So the next move by the Fed is going to be crucial. They can break it all. There's not much to break anymore. It's really the last straw, or they can now finally get real and just pause and then come down when it's necessary. It's a really important, crucial moment next week.
Like next week, it feels like do or die.
Exactly. It is.
Don't you also have to have a mechanism though, where unless you have really like immediate deflation starting to take over in a lot of sectors, or productivity increases, don't spending habits also have to change for this thing to not go completely off course?
I mean, there is the fact that technology, you know, Cathie Wood is very good on that. Technology really brings deflation usually. You have just this whole increase in productivity through the gains in technology. So if you let the nature of that work, yes. But you know, the problem is, what do you focus on? Do you focus on the legacies who have a real problem? I mean, they have a real problem, like from all sides. Or do you focus on the economy as a whole and think, okay, we're making so much progress in biochemicals and in obviously in EVs and in energy production and in transportation. Exactly. And so this all will bring more efficiency and in the end lower prices and employment. So I another subject we should talk of one day, because I saw your T-shirt and I'm actually not settled yet, is whether the robots are a curse or a blessing for the next 10, 15 years. I'm really not settled on it. I mean, I see 50 use cases where I would love to have a robot. My ironing table is ready again. I'm like, please do it. But I also see 50 problems once robots have taken over. And I'm a little bit hesitant, maybe an age issue with this whole ChatGPT-4 and all that. It is incredible how good this gets. This gets better than human. This gets quicker than human. This gets more precise, less error rate. It gives me an uneasy feeling, and we can't stop it. I mean, one thing I've learned with technology, you can't stop it, but it gives me still a very uneasy feeling, and I'm not comfortable with it to 100%.
It feels very unprecedented this time. Yeah. It just feels extremely unprecedented because you have this sort of coalescing things that are coming together, like across multiple things. At least to me, hey, I haven't seen a lot of these things, so it's like I'm just speaking from what I've read and what I've seen, and it's not a lot. So, but it still feels like to me that where we are right now is people. And do you know how much savings people have, like versus historical? Like, do people have savings, less savings, right?
I mean, so it's less than 2 years ago, but I don't know the exact number.
Yeah, because that's a big missing piece for me. Is like, okay, so if we have record household debt, and I get like, yes, as a percentage of GDP, it's like less than before. I get it, but I don't think that's the right way of looking at it. It's like as a percentage of wages. So what is like the household debt? Right, exactly, and it's not really there because wages haven't really increased that much in the last as an average.
One thing that is clear: the worker The normal
Yeah.
salary worker, he's the
Screwed.
loser in this whole, exactly, the loser in
Yeah.
this whole game. Crazy. Has always been for a long, long period. Was a little bit better between 2016 and 2020, but now it's like completely screwed.
Yeah.
The
And so what you
spending power is going down.
It's crazy, right? And then you put that within the context of the debt. It's like, okay, so what's happening now is people are making, they don't have as much spending power, but they have way more debt. And the spending habits are to take on more debt while saving less. Okay. And then we are doing this in an environment where everybody has a job. And so there has to be a mechanism where people, as long as we agree that freeing yourself of debt is a good thing, that there needs to be either people need to be able to pay their debt more, or we need to figure out how to lower their expenditures. Like we either have to increase their wages or lower their expenditures so that this debt thing can come down, so that they're not crushed by interest, by this
and
worthless.
If they lose, and if they lose their jobs to the robots, then what, right? How do they? What do they live off?
Exactly. So I don't know. Do I sound too pessimistic? Like I don't see how this ends well. That's all.
With lower rates, it will end well, but it will. The thing also is, I have this feeling whenever I'm going to the normal outside world that people feel during those 2 COVID years, they were so deprived of travel and leisure, and whatever, that what the heck it costs now, it has to be done. You only live once, and
humans are going to human.
Exactly. And that's this party feeling, 1999 feeling, where you just think, ugh, everybody calm down a little bit. And I mean, I understand, not everything, but I understand where the Fed is coming from. There are issues that need to be solved, and higher interest rate would hamper these issues. But at the same time, if you break the economy, then if we go in a recession, they have to lower rates. There is no other remedy for a recession. So it's a very, very fine line. And we've gone too high too quick. The speed of the acceleration of rate increases was too much because they were late, right? They went from this is transitory to, oh my God, we got a problem. And so they are part of the problem. And now the big question is, will they increase the problem and break it? Or can we just get out? Actually, I think this whole SVB thing was a blessing in disguise, because the Fed speaks the language of bankers, right? Now they have the bankers on the phone saying, this is it. We've got these 3 little banks. They were saved. It wasn't too painful. I mean, it was painful for a lot of people, but it wasn't too painful. But stop now, because this is this was the alarm bell. And so I hope this is it. We'll see this week.
So let's hear your prediction. Next week, the Fed will...
I think they will stay. They do nothing. Just keep stable.
What's the percentage chance you give that?
40 and 60% that they raise by 25%.
Oh, no. Oof. Yeah.
I mean, it would be me, it's 100%. And I would even hope he has some dovish talk saying, okay, we're seeing the PPI. We think that by, how they always do the points, the cloud, that we see people thinking already about lowering in 6 to 9 months, and, giving the market something to breathe with. But
this is Wednesday at 1:00. Is that when it's supposed to be?
Exactly.
1:00 Eastern, right? I think.
Yes. And then the press conference afterwards.
Man, we'll see what happens. I mean, it's Should we call it there? We're almost an hour in. Do you want to go longer?
That's it now. That was good. I loved it.
1 hour. That was perfect. I feel like it flowed really nicely. Let us know in the comments what you think. We had 33 people watching us on average.
Wow.
Look at that.
Can you imagine?
My goodness. We've made enough noise. We made enough noise. Yeah, for those that are watching, this is something that we just Alexandra and I, we just really like talking to each other. And I feel like the conversation is always very vigorous and great. And it just makes me think a lot. And I really appreciate you. I really appreciate you making the time for this. It's awesome. Seriously.
Thank you. Yeah. I love it too. And I think we will not always talk Tesla. We should talk about
we didn't even talk Tesla today.
Exactly. Yeah. So I think that's a good thing.
Yeah. I'm game to talk about anything.
There you go.
Yeah. Whatever comes up. Thank you so much. Thank you, everybody.
Thank you.
We'll see you around. We are the Noisemakers. We should make a song or something. We should get like noisemakers every time we start the podcast. Like,
ask ChatGPT to do you a maker song.
Oh yeah. Okay, I'll do. Please make me a theme song for the Noisemakers podcast.
There you go. Okay,
have a good evening. Bye, everybody.
Bye bye. Bye bye.